Seeds of Wisdom RV and Economic Updates Thursday morning, August 21, 25. Listen to the full version on the official dinarreport.com blog and become our supporter on Patreon. Good morning. Dinar recaps. Fed governor tells bankers DeFi is nothing to be afraid of. Investment advice. Federal Reserve Governor Christopher Waller urged policymakers and bankers not to fear decentralized finance, DeFi, and stablecoins, calling them drivers of innovation in the U.S. payment system. Waller reassured both his peers and the private banking sector that crypto payments operating outside traditional banking infrastructure are not inherently risky. There is nothing scary about this just because it occurs in the decentralized finance or DeFi world. This is simply new technology to transfer objects and record transactions, he said at the Wyoming Blockchain Symposium 2025. He emphasized that leveraging smart contracts, tokenization, or distributed ledgers for everyday transactions should be viewed as a natural evolution of payment services rather than a threat. Federal Reserve's shift toward embracing crypto. In April 2025, the Fed withdrew 2022 guidance that had discouraged banks from engaging in crypto and stablecoin activities. Last week, the Fed also ended its risk-heavy, novel activities supervision program that oversaw crypto-related activity. Fed Vice Chair Michelle Bowman recently suggested Fed staff be allowed to hold small amounts of crypto to better understand the technology. Waller's comments highlight the Fed's ongoing pivot toward integrating digital assets into the U.S. financial system. Waller is potential next Fed chair. Waller's views carry additional weight as he is considered a front-runner to replace Jerome Powell when Powell's term ends in May 2026. President Donald Trump has reportedly pressured Powell to resign early. If nominated and confirmed, Waller could become the next crypto-friendly Fed chair, shaping U.S. monetary and payment policy during the transformative era. Making crypto relatable. Waller compared stablecoin transactions to ordinary debit card purchases. Buying a meme coin with stablecoins works the same way as tapping a debit card to buy groceries, he explained. In both cases, money is transferred and a transaction record is generated, whether it's a paper receipt or a blockchain ledger. This analogy framed crypto payments as intuitive and familiar, rather than radical. Genius Act. Key for stablecoin adoption. Waller praised the guiding and establishing national innovation for U.S. stablecoins, Genius Act, as an important step for adoption. Stablecoins, he argued, could strengthen the dollar's global role, particularly in high-inflation countries and regions with limited access to physical dollars. They also improve both retail and cross-border payments. Stablecoin market outlook. Current stablecoin market size, $280 billion. U.S. Treasury projects the market will reach $2 trillion by 2028, a 615% increase. Growth will be accelerated by a clear regulatory framework and stablecoin issuers' demand for U.S. Treasury bills. Market leaders today. Tether, USDT, at $167 billion and Circle, USDC, at $67.5 billion, CoinGecko data. Bottom line. Waller's remarks mark a major philosophical shift from the Fed, positioning DeFi and stablecoins not as threats but as essential innovations. With the Genius Act laying the regulatory foundation and the stablecoin market primed for explosive growth, the U.S. is signaling that the future of payments will be digital, dollar-backed, and blockchain-enabled. A powerful new initiative is reshaping the fight against crypto crime. The Beacon Network, backed by major exchanges, financial companies, and regulators, enables the rapid detection and freezing of stolen blockchain funds. Key points. The network brings together Coinbase, Binance, Kraken, Robinhood, PayPal, Anchorage Digital, Ripple, and leading security researchers like ZachXBT and SEAL. Supported by law enforcement and regulatory authorities in multiple countries. Designed as a kill chain system for digital assets, moving from detection to blocking in minutes, not days. Already blocked over $1 million in fraud-related crypto transactions. Why it matters. Since 2023, more than $47 billion in crypto has been linked to scams, hacks, and fraud. Traditional investigations lag behind the speed of blockchain transfers, making recovery nearly impossible after funds are dispersed. The Beacon network enables real-time alerts when stolen funds hit participating platforms, allowing them to be frozen before they vanish. First successes: $1.5 million recovered from an international fraud scheme. $800,000 in fraudulent deposits frozen before withdrawal. Safeguards and reliability: only verified investigators and partners can report illicit activity. Each report must be backed by evidence and accountability, reducing the risk of abuse. Next steps: expand partnerships to widen coverage across global exchanges and financial networks. Focus on tracking funds tied to North Korean hacker groups and combating terrorist financing. Strengthen protections for victims of large-scale fraud. The Beacon network represents a turning point, crypto's leading players and regulators uniting to make the ecosystem safer and more transparent, leaving criminals fewer places to hide. U.S. patent shows XRP registered as a payment method in the United States. A United States trademark registration for XRP as a payment method has resurfaced, sparking both excitement and confusion in the crypto community. The document, issued by the U.S. Patent and Trademark Office, USPTO, in December 2013 under registration number 4,458,993, is authentic but does not carry the sweeping implications some community figures suggest. The XRP trademark, what it really means. Filed by OpenCoin, Inc., now Ripple Labs, on May 17, 2013. Registered under International Class 36 for financial services. Defines XRP as a means of providing secure payment options in both traditional and digital currencies across a global computer network. Dinar commodities. Ripple listed its first commercial use of XRP as March 1, 2013. The filing protects the name, XRP, as a service mark for financial services, not government recognition of XRP itself as a legal payment method. Multiple independent sources confirm the registration details, including Justia Trademarks, USPTO's TSDR system, and academic references such as the UC Davis Law Review. The registration remains active, with Ripple maintaining regular renewals. Community reaction versus reality. Some XRP community influencers have suggested the trademark proves the U.S. patented XRP as a payment method or gave it official government backing in 2013. Influencer Amelia and others claimed it was a sign of U.S. recognition. Jack the Rippler echoed similar interpretations. However, the reality is straightforward. Ripple itself filed the trademark to protect the XRP name, much like its more recent filing for its stablecoin RLUSD. The registration does not represent U.S. government endorsement or regulatory approval. Why it still matters. While not proof of government recognition, the trademark highlights Ripple's early legal foresight in securing XRP's intellectual property protections. Ripple currently holds 39 U.S. patents, with 18 granted and 62% active. The 2013 XRP filing reflects Ripple's long-standing strategy to legally defend its financial technologies. Checkmark key takeaway. XRP's 2013 USPTO trademark filing demonstrates Ripple's early commitment to securing its brand legally. It does not, however, signal U.S. government approval of XRP as a national payment system. Listen to the full version on the official DinarReport.com blog and become our supporter on Patreon. Source: DinarRecaps.com